it does still exist. There are still good yields out there. We were talking earlier before this that like, yes, I am leveraging PTs. I think that's a lot of fun. There are a lot of risks to that. I think the reason why leveraging PTs is so available now is because had you been doing this exact same strategy as yields were increasing, you could have gotten liquidated because your PT value may have gone down, right? If your PTs are inherently short yield. So if the implied yield goes up, your PT value can go down, even though it should always mature to the full like one-to-one value. And we did see some cases where people got wrecked because of buying PTs at the wrong time and leveraging them at the wrong time. So do know, like, it's a real risk that does exist. So, you know, like, just because I'm doing it doesn't mean you should do it. We were talking before that Spectra does have higher yields than Pendle currently. But, and this is the big caveat, welcome to today's Dojo pod. There is, believe it or not, a lot to be excited for despite the doom and gloom of price action. Patrick isn't here today, but if he was, he would say, I told you so about the oncoming recession. Maybe we're in a recession. You know, the definition of recession can always change. It has before, at least sort of, right? The de facto definition of recession is 2 consecutive quarters of negative GDP growth, or, you know, GDP decline. Seems like we're heading in that direction. And, well, you know, equities taking a bit of a beating. We saw a decoupling and then a recoupling and then a decoupling. And so, you know, maybe we're going to recouple again. But in the meantime, I think, I don't know, I've been pretty comfortable, knock on wood, in stablecoin plays. I think it's surprising that this cycle, there are so many options, and none of them that I would touch at least are algorithmic. So you have like real actual treasury yields plus points, or treasury yields plus points, or even like treasury yields plus points with the occasional like basis trade. There are some other interesting things out there, but like there's so many stablecoin plays that are, I don't know. What would you say a good or average rate for stablecoins is right now?
Great question. And I agree with you. Like, you know, it's tough out there. I would definitely encourage folks who, you know, I think there's a lot of people feeling pain. Old timers who've been around for a while, who expected a different kind of cycle. New timers who maybe there's not too many of them, but like were promised the golden bull run and didn't get it. So, you know, it's painful out there. But as you pointed out, there's a lot of interesting stuff going on. In terms of stable coins, you know,
I think there's a lot of new timers. I think that for better or for worse, the meme coin frenzy onboarded a ridiculous number of people. If they're still around, that would be probably.
I feel like maybe DeFi had a bit like, so like previous cycles, like for example, like the last one, there was more people that like came and stayed because like, I don't know, the people that tend to use DeFi quite frequently are intellectually curious folk who, you know, came for the high yields and stayed for the culture and stayed for the kind of interesting primitives and abilities that DeFi allows you to have. I think with meme coins, it was more like purely a casino. And so I don't know, maybe there'll be a whole new class of 2024, 2025 who sticks around and is still here. But it feels a little bit less like that. In terms of stable coins,
it'll be institutional retail. It'll be all the little tiny baby institutions who are coming on to chase our RWA yields.
Yes. Yeah. So in terms of stable coins, you know, I think like at this point in the market, squeaking out above 10% I think is good. I think there are some stuff out there to get, you know, into the mid-teens. Not as much stuff as there is to get into the 20s. Like maybe there's like super high risky, super like, you know, low liquidity options for that. But I think in that kind of 10 to 15 range, and then hopefully as we get a bit of relief in the markets, that will pick up a bit. But that's the range I'm seeing. What are you seeing, Stephen?
I think that's just about right. I mean, so for those of you who don't know, I do post weekly updates on my portfolio, like all of my positions in the dojo, and I'm not bragging because the reason why this is the case is because yields have gone down. But my last week's annualized yield was like 27%. So, you know, I took all of the earnings that I made from last week, and then I divided it by my portfolio size of last week, and that's 27%. That's pretty impressive, I think, in the bear market, but I take no credit because a lot of my positions were leveraged PTs. And so for those of you who don't know, when the yield, the implied yield of a PT goes down, the value of the PT goes up. So I'm going to hold most of these, or if not all of them, to expiry, I think. And so like it doesn't really change much. It just means that like I've made most of my yield up front, and now it's going to be a smaller APR from here on out until expiry. But I thought that was pretty cool. I think that it's
And
really
actually,
cool.
just to jump in there, I mean, this thing about buying PTs,
You've
I
traded
think the
PT
tradition,
stuff this.
yeah, I love the PT game, and my typical approach to PTs is like, you get it in a rate that you are happy at. Typically, I like to use Pendle, and I like to use limit orders because otherwise, like, slippages can get pretty crazy. But you get in at a rate you like, and then you have surprisingly a lot of optionality. Like, they're kind of presented as this like fixed rate thing, which of course, if you hold them to maturity, they certainly are a fixed rate product, and you will get the yield that, is list that you get filled at essentially. But there's been a lot of cases recently kind of in this more bearish period where you can get in at a higher implied value, higher IY, implied yield, I mean. And if it changes significantly, you can get out and you can actualize that a lot earlier, and you can kind of really pump up the APR if you have another opportunity to go from, one PT where you got in at a good price, and then you can get out when potentially things are looking a little bit more bearish, and then move on to the next one. And that really increases, the like, if you could annualize that over and over and over again, it would lead to a very high APR. Sometimes, as you're saying, there's not really another equal opportunity out there in terms of yields, and so it just makes sense to stay. But for me, the example was the Boyko vaults. I got into those at a very high, expected yield. I think I got in like around the 30s, roughly, like into specifically the concrete bear vault for USDE. So where is it? That one right there. Yep. So I got in around 30, and then I used limit orders. I got pretty lucky with getting like filled, and what's going on here? Anyway, so I got into that, and then the yields just started crashing. I think people started getting a bit like kind of bearish on the percentage of tokens that were allocated to it. Many different things going on. And then, I essentially was able to exit it at a big kind of like win in terms of like the actual appreciation of the PT. Yeah. And then I've just been holding on to it and earning the bear yield that comes along, the concrete exposure, the Athena exposure, which, I don't know, maybe at like, I think it's quoted right now something at like 10-ish%, 9-ish%. I'm kind of willing to take some of those bets, especially when I've already actualized quite a big gain, like the majority of the gain that I was expecting to appreciate. So maybe you can explain to Steven just like how the math works. If you say get filled in at like 20% or 30%, and then you exit at like the price of the PTs crash, and it goes down to like 10%, what is the return on that? Because it doesn't quite work exactly how people I think expect it would.
Yeah. So I have spent time making tools for this. Wow, this is an ugly tool. I should make a better tool for this. But like the basic idea is that it's a bond, right? So like, let's use a year, because this makes it super easy. Let's say you have 20% fixed rate APR over 1 year. So in 1 year, you'll make a 20% return. So for example, if it was a stablecoin yield and you bought it the day it was issued, like the very first day with a year to expiry, you would buy this for like 80 cents on the dollar, right? So you would take 80 cents and you'd be able to purchase the right to $1 in 365 days, right? A 20% yield in a year. Now, if you purchased it that day and the next day the implied yield went to 10%, well, instead of there being a 20% discount, there's now a 10% discount. So you've made now 10 out of 80, which I think is like, I don't know, 12% or something like that. You would have made a 12% ROI in 1 day. Because now the discount, so it's, you purchased one for 80 cents, and now it's worth 90 cents because it has 10% in a year to close. So you went from 80 cents to 90 cents. It's a 10 out of 8 or 1 out of 8%. I'm going to do the math right now just so it's going to bother me if I don't get it. Oh, I was right. 12.5%. Look at me. So that's a 12.5% increase over the day. So and if it goes back down to 20% the next day, right? Yeah, you've made a little tiny bit of yield. You've made, 220 out of 365, well, whatever that is. You've made a tiny bit of yield, but like now your position is going to go from like 80 cents to 90 cents back to like 81 cent. So it can go down, but it will expire at $1. So in 365 days, it will expire at $1. So that's the cool thing. about these PDs, you can trade them in real time because the IY is floating and the rate you get is fixed. We had like a multi-hour discussion on treasuries in the dojo. I mean, really, sometimes I feel like I should be paying the people in the dojo. Luckily, like if you're a black belt, so like if I think that you are better than me at DeFi or, you know, crypto in general or finance, typically you'll end up being a black belt, and black belts get everything for free just because I think there's such a value add. But they were teaching me all about treasuries, and I was like, oh, this is just like Pendle. This is just like the PT. This is just like the IY. So you know, a coupon is this. And I think they were like, no, just think about it in bonds. Don't you know what bonds are? I'm like, no, I literally have never purchased a bond. You think Pendle is your ally? I was raised in Pendle. Yeah, whatever that Bain quote is. So yeah, I grew up in the mean streets of decentralized finance. So it was fun to learn all that. But yeah, you can trade PTs. They are super interesting. When the yield goes down, the PT value goes up. And that's really all you got to know. And vice versa.
And most of the time you can get out of it, right? Most of the time you can get out, you can move on to a different position if you wanted to. With these bear ones, it's been a little bit different, where I've been stuck in them until today. Actually, they're expiring today. So I'll be able to go and do something else with them now. Or actually, this is kind of a complicated subject. So
you can't, because you
I can't. So like the Pendle vaults.
You can and you can't. There are some that have liquidity on like Uniswap.
Right.
But not most.
So just as a reminder for folks, Boyko, I believe, ends on, is it May 5th or May 6th? Anyway, it's about roughly a month from today. But for some reason, the Pendle markets expire, you know, like 25, 26 days early. So that's a little strange. So there's going to be all these people who...
Yeah, it is strange.
You know, are sitting in these assets, like the concrete assets, like the EtherFi assets, like, I don't know, there's probably a bunch of other ones, Solve assets. And, you know, they're going to be just in that for the next 25 days without the kind of Pendle exposure to it. So yeah, it'll be interesting to see how all this stuff kind of affects Berachain. I mean, obviously the market's down across the board. I still think that Berachain's one of these, you know, havens of interest in DeFi, where there is actually a lot of like cool stuff going on still. And, you know, this is a good test for Berachain, essentially. Like, you know, they have this like proof of liquidity system. We've seen kind of how it works when the markets are not absolute terrible. I think now the markets are fully absolutely terrible. And so we're going to see kind of how it kind of, you know, how much rigor it has, how much kind of like it can survive these types of conditions. But they are building some cool stuff. There's a ton of different protocols that are doing interesting and useful things on Berachain. What have you been looking at over there, Stephen? Is there things you particularly like and things you particularly don't like?
Yes. Yeah. I mean, I think that's the exact right way to phrase it. There are things that I particularly like, and there are things that I particularly don't like. Some things that I particularly like, actually, you pointed this out to me today, so shout out to you, was that things like IBGT are paid out in, the yield went, okay, never mind. I thought that was the yield. The yield is going way up. Now, you explained this to me, why the yield is going up. The yield is not going up because you're getting more IBGT as emissions. In fact, you're not getting IBGT as emissions. You're getting honey. Well, actually, you're getting honey, IBGT, it seems like, and what is that, Ibera?
Yeah, so, I mean, it's the way this essentially works, just for people to understand, is like, so this is like a bribing system where all the validators get bribed by the protocols in different assets. And so when this all started, it was all in Bex, which was like the native DEX of Berachain. Right. And so everything was being in Honey because it was all swap fees that were then being converted into Honey. Now there's a lot of different assets people could be getting paid in, whatever the briber is paying them in. But what I understand Infrared is doing is they're converting a large portion of that into Honey, some of it into Bear as well, especially if the bribes are coming in Bear. I don't think they're just dumping it. And so from my experience, I have farmed a decent bag of IBGT. And I check in on it from time to time, and I'm always pleasantly surprised by how much honey and stablecoins I have earned. But you do get a bit of other stuff, so like some wrapped Bera. I don't think I've actually gotten any IBGT. Maybe that's like a reference to you're getting points if you're holding IBGT. Maybe that's why that logo's there. But in my claiming, I tend to get primarily honey with a little dash of Bera.
Yeah. That sounds right, and also explains why the APR is so high. So the APR is so high because Bera is so down, and so like relative to the rewards, which are denominated in dollars, you know, you have to, the value of the IBGT has gone down, and so the APR seems higher. So like if the value of your emission relatively goes up, the APR seems higher, even though the amount of emissions may not have changed. It's kind of a confusing way of saying like, the yield is long dollars, and so dollars have gone up versus IBGT, and so the yield has gone up.
But actually,
Go ahead.
the just if you don't mind going to Ooga Booga, the premium on IBGT has continued to be very high, which I think is
This gives me the willies, because I just think like at some point the shoe is going to drop. Until then, like, it's kind of a fun game, but there's just so much to lose now because of the premium. And it kind of reminds me of from back in the Ohm days, where like there was just such a ridiculous amount of premium relative to the NAV of which was backed by its treasury. And like, because there was so much premium, that premium is what eventually went away. Ohm was, I think, $1,300, maybe even more than that at some point in time. And then all of that premium brought down to like $4 or something. And then it slowly grew. And then, the stability module kicked in, and Ooga Booga, not Ooga Booga, but Barachain feels like they're playing a similar game here.
Well, it's not quite as extreme as you're saying. I looked at this yesterday, and I think it was like 50 or 60%. If you,
it's still a lot.
Oh, I know it's still a lot, but like this thing does have a inherent NAV value,
right?
Yeah. Of like one Bara, so you'll always be able to unwrap. And here, yeah, it's still 60%. So, like one trade which a lot of people have been either thinking about or doing is, like collateralizing something on Dolomite, for example, like stables or Bitcoin or ETH or I don't know, whatever they want to be holding, and then borrowing Bara against it. And if you borrow Bara right now, I guess you are paying 42%, which sounds
bad.
No, it sounds really high, but then if you look at IBGT, you're getting paid 330% APR, I believe. I think that's not even an APY. I think that's an APR, which would be an insane APY.
Hear me out.
Yeah, that's like what it looks like if you turn it into a APY. 2,400
here. It should. Okay, no, actually that's right. APR 324, yeah, and then APY 2.43K. So, do you want to explain what Origami does?
I'm not super sure I know what Origami BGT does. Do you?
Oh yeah, this is auto compound IBGT.
Oh, okay. So they're just I got it.
Mm-hmm. It's not Ori. So I thought it was like Ori BGT. It's Or IBGT. So it's like, Origami's IBGT, and they just auto compound the whatever emissions IBGT has. And so it goes from that APR, which we just saw, which is around 333, to 2.43K. And you can use this if you wanted to as collateral on Euler, which is really cool. And you can leverage that crazy yield. I'm not saying you should go do that. I'm just saying it's possible.
Well, and the thing is,
it terrifies me. Go ahead.
Yeah, the premium is a crazy thing. So people have been like trying to do this strategy where they, like borrow Bear, swap it into IBGT, and then pick up that, 333% APR, or use Origami and go even higher. The problem is that like we have seen a lot of volatility in this peg, right? It's been pretty much like steady, kind of in this uptrend, hanging out at this like 1.5 or like 60% premium type of thing. But I think we all kind of know one day it's going to crash. I think the fair value probably of BGT is like maybe, 1.1, 1.2, somewhere in there. There's such a high yield, so it's like it is worth something that is a premium over Bara. But I think it's hard to justify it being like going and buying this at 1.5 or 1.6. And so I don't know. It's a dangerous game. It does remind me sometimes like of these, money games from a yesteryear. But I think we all know that like eventually the wheels of the car are going to fall off, like unless they can find a way to keep the yield super high and people paying that. Otherwise, it just makes sense to farm IBGT and like dump it because you're getting such a higher APR than if you were, just holding Bara. So super interesting stuff. Are you playing any of this or?
No, I'm not playing the Bara BGT game. I have thought about it. I have less than 1% of my portfolio has delta exposure right now. I'm stabled up. I am waiting for, the good man, Groot, in our Discord to say, like, tides have changed, signals have swung, time to go long. He's done it, as we've said like 100 times, he's done a really good job calling roughly macro tops and macro bottoms for the last 2 cycles. So had I heeded his word earlier, I would have saved a bunch of money, but I was greedy, and greed is the portfolio killer, as I will remind.
Just real quick, Stephen, when it is time to go long, will you go long the same old stuff? Will it be the Bitcoins of the world, the ETH, the SOL? Are you going to go long?
So hard to justify ETH. I mean, if we looked at like what happened this cycle, well, everyone and their mother thought ETH was going to be 10K, right? Well, Bitcoin's going to break 100K, and it did. And it's going to go up to 120. It didn't. And so ETH because ETH is it's like the mama bear of crypto. You have BTC being papa bear, ETH being mama bear. Of course, it's going to follow and do just as well, if not even better, because it has beta. And then it didn't. But Solana did. So Solana caught the meme coin narrative, which was highly value extracted from retail and highly value extracted from all altcoins, I think is one of the main arguments. And I think that was probably a true argument. Also soul crushingly bad for a lot of people. I think potentially even worse than the Ponzi season of last cycle. But I don't know. I think there's probably going to be a new Solana. There's going to be something like Solana next cycle that is unexpected. And I don't want to say insiders, but like people who have sway over the market can disproportionately benefit from. And because retail was like, everyone in retail thought ETH was going to outperform, everyone in retail was there, I think there's just less money to be made by the people who move markets. So Solana, it was dried up, it was dead after FTX. I think there was tons of money to be made there, and it was successfully done. I want Solana to succeed. I really do. I love the Camino team. I think Radex is doing something really neat over there. I even like Exponent. I think Exponent is doing something cool. They finally have leveraged PTs, not a lot of liquidity, but like they're doing all the things they should be doing. It's just got like this big dark cloud of, I don't know, maybe bad karmic debt looming over it from meme coin season that it still hasn't repaid. We'll see what happens. I think I'm going to be Bitcoined up for sure. I wonder if that's going to be the new ETH. If people are going to be like, oh, everyone's going to Bitcoin now. And then so something else has to outperform. Who knows? But look, Bitcoin still seems like a relatively sound investment. It's the only long exposure I currently have. And it's the only one that I'm interested in getting more of now. But who knows? I am a terrible altcoin trader. I like Pendle. I will say that's one asset that I follow pretty closely, and it keeps bouncing between like $2.60 to like $3.20, and it's definitely a high beta play. Like when ETH goes down, it goes down more. When ETH goes up, it goes up more. And so I've been watching it for a while. I think like Pendle being the de facto rate swapping thing of DeFi has been amazing. Billions of dollars of TVL still. It's definitely the best yields in town for big boys. Hedge funds can deposit $10 million into PTs at 10% APR on stables and just sit and wait. Fixed rate, fixed date. So I think a lot of the tailwinds will go back. It does use a V tokenomics mechanism, and I think that is not a systemic risk, but it's an issue. They have to do it to attract liquidity. There's really no other way to get liquidity. And really, like, that's a cheat code in and of itself, because by forcing liquidity to get built up in these markets, and all of these markets have like at least $1 million of liquidity. Now leveraging the PTs becomes less scary because risk analysts are saying, well, you do have sufficient liquidity. Like Pendle helps you build millions of dollars of liquidity. Then you have these money markets that are saying, okay, well, you have liquidity for the PT asset. In fact, in some cases, the PT has more liquidity than the underlying asset, which is insane to me. So I don't know. I'm rambling. What about you?
Yeah, no, I think it's a super interesting question. I don't know. Sometimes when I think of the scale of these assets, like, ETH is still like a $200 billion asset. It scares me because it feels like they're just so wildly overpriced. On the other hand, I think I'm always the ETH bull in this show, and I feel like I have to fall into that. I mean, I do think there's still hope out there. Like, I still think, for large capital allocators in this space, for people that are really participating in DeFi at a high level, they're most likely doing it on ETH, or they're using an EVM. Even when we're talking about Barachain, I mean, that's still like Polaris is still an, Ethereum virtual machine chain. So I don't know. I don't know what ETH should be worth. In terms of Bitcoin, like, I think it's the only one that's really gotten escape velocity in terms of like being publicly discussed. Politicians, seem to care a lot about it. We've had all these things. It's going to be interesting to see like what the next big story is. Like with a very speculative asset like Bitcoin, we need a story to all buy into and get excited about. And we had that with Trump and regulation and ETFs and, strategic Bitcoin reserves and all these different things. And it's hard to know where the next bull case, the next kind of like story we can all get our hearts set on is going to come from. Maybe it's like with this huge trade war that like, we'll have less US dollar hegemony and that will lead to people transacting more in Bitcoin. I don't know. That doesn't seem very, very likely to me personally, but like that could be the story that we all kind of, the markets start buying into and like can push it up higher. But yeah, I don't know. I mean, even Bitcoin, like what's I forget what like the the FDV of it is at this point, but I mean, $1 trillion asset, right? So it takes a lot to move this thing.
Yeah. Well, that's kind of my conspiracy as to why ETH may have underperformed, is because Bitcoin, despite being a $1 trillion asset, has different liquidity profiles than things like ETH, which just have tons, like have liquidity with everything. So even though ETH may itself only like have a X amount of market cap, ETH is paired with like every single DeFi asset that exists as its main liquidity source, or at least its secondary liquidity source. It's usually like, governance token, stablecoin, and then governance token ETH as the two major liquidity pairs. And so I wonder if all of those assets, one, when they go down, they can sometimes be a drag on ETH. When they go up, they're like, it just seems like ETH has a unique set of drag conditions that Bitcoin doesn't have. And no one seems to be talking about it, which means maybe I'm just wrong. But I feel like there's something significant there. But this is the Bitcoin S&P 500 chart or SPY chart. And I think there's a good argument that it has been decoupled, and it is continuing to perform pretty well relatively. And if we look at the great decoupling of a few days ago, here it was, and then got slapped back down.
But look at that gap. Yeah.
Yeah. I am definitely, we've seen some people exit the space, right? It happens every cycle. And it always makes me sad. Donku was one who I often think about, who was he was a gem, and people just really, really ragged on him for UST as if it was his fault, as if he knew what was going to happen, as if he had inside information. It bums me out because he was a cool guy. And there's going to be a lot of people who get shaken out. And so I wonder like what stays around, what sticks around. As we say, every cycle, 99% of coins are going to be worthless eventually. It's like you just get to have a .com bubble every cycle. And what stays around should be more valuable the next cycle. But there's just so many new factors each time. It's hard to predict. Like this cycle, I don't think anyone thought there would be literally millions of meme coins launched like per month almost. And that those would just be so dilutive in the overall TVL of DeFi. But luckily, we still have things to be happy about. So you asked.
It's funny that you say millions. I think that's actually an understatement. I think that
Billions?
Pumped Out Fun launched, I think it was like 6.6 billion. So in its period of time, and like Pumped Out Fun hasn't been around for that long in real terms, right? So like, let's just give it a generous 2 years. I don't even think it is 2 years. So like on a monthly basis, you're talking about like hundreds of millions of tokens or something. I mean, of course it's not just like linear, like there's hot periods where there's a lot released and periods when there's less released, but still, I mean, it's just incredible how that worked. And I do agree with you. I think a lot of, every time retail comes in, crypto kind of spanks them on the butt and says, thanks for playing. We're going to take your liquidity. It was like Ponzi games, seniorage tokens. There's been all sorts of ICOs, but I do think that like meme coins were the most extractive. And Jordy Alexander, who I think, he's one of the co-hosts of Steady Lads, which is a great podcast, and, manages Salinity Capital, which is like a market making firm, said, I think had a great quote, which was, the difference, people always call kind of like meme coin trading or this like Solana hyper exuberant speculative thing as being like a casino. But in fact, it's way worse than a casino, because at a casino, they actually have an interest in keeping you there, of having you come back, of not just completely fleecing you of everything that you have a bad interaction. Meme coins are more like, if you went to a huge room of slot machines and every single person owned their own slot machine and just wants to get the most out of you as they possibly can, because they don't care if you ever come back. They just want to get your money now. And they don't care if you ever come back to the hall of slot machines, since, they can maximally extract that way. So I thought that was a good analogy, and kind of debunks a little bit that idea of like, it's all fun and games in the meme coin world. Like, it's just a casino. Everyone can win and lose. I think, the deck really was and is stacked against people. And, we saw it with just like the speed at which these tokens were around. Like there were tokens that people like Murad talked about that were there for weeks and months and did relatively well. And then like by the end of it, it was like, with stuff like Libra and like the Central African Republic token, they're like, if you didn't get in within the first 10 minutes or an hour or half a day or something like that, everyone lost money. So, it's just like a way of hyper financializing things and hyper, like just finding ways that these kind of like teams can extract and like take money out of the system, which I do think, led to an overall underperformance of stuff like other altcoins like ETH, and many other kind of like altcoins, especially in the, ETH ecosystem, but as well as the alt ones as well. So anyway, we don't need to get too much into this. I do think, like it's worthwhile thinking about, and it's worthwhile, when everyone's so unhappy and so sad, like it's always good to reevaluate what you did right and what you did wrong and what you can improve for the next time around and how you plan to position yourself. I think having broad ideas of what you want to do is very good, and like being introspective on that. Of course, things will radically change. Crypto's always radically changing. And so like the landscape, once we are bullish again, might look very different. And so we might be talking about different assets and different plays, but I think having broad heuristics and ideas of like how you can do it better next time, how you can, what you're aiming to do, I think is very important. So,
well, this makes me think like if I entered into DeFi for the very first time this cycle, would I have made it? And honestly, I think the answer is no, because most of the money was made in meme coin trading, and I am a horrendous trader. I can find yields all day with the best of them, but meme coin trading, I just don't have the chops for it. And I wonder, like, who survived this cycle, and how is it different from last cycle? So last cycle, people know I'm not proud of it, but I made my first like small chunk of money. It wasn't like, it did change my life. So it was life-changing money in a way, because it allowed me to have enough capital to get fired from my job, sort of by choice. I refused something and they said, well, you're going to be gone. And I said, okay, fine. And it gave me enough time to build something that was self-sufficient. This cycle, I don't know if I could have done that. Well, granted, I credit God because I'm a Christian. So who knows, probably maybe. But there's two big narratives, right? There was one, which is meme coins. And I think the second narrative, which you certainly participated in a lot, was airdrops. I think those were the two kingmakers of this cycle, meme coins and airdrops. And with both of them, it's kind of like you had to sell them at the right time. But both of those could have made you wildly ridiculous returns. And I think if I had to guess, people who made their fortune off of airdrops were probably second cyclers, not first cyclers. And then two, if either of those were to still be around, I'd probably say it was the airdrop farmers have been able to stick around, whereas meme coin people are probably still losing their money now.
Yeah, one is kind of, like with meme coin trading, like it's very easy to lose. With airdrop farming, I would say it's very easy to lose your time. Much more, not impossible to lose money doing it. Of course you can, like if you had exposure to some volatile asset and it went down, but like it is not as much inherently as like, your asset could go to zero. It's like there's an opportunity cost that you're spending. Maybe you're spending a lot of time doing different actions or researching or whatever. Mm-hmm. But I don't know. Maybe I'm just speaking my own bag. I obviously do enjoy
it. From a place of like knowledge, and I think it's a really important point to make that like, yes, it feels like free money, but how much do you value your time?
Yeah, absolutely. So there were some fantastic, airdrops this cycle. EtherFi was a big one. Renzo was a big one. Athena was a big one. Jito, that was what sent 1,000 ships of airdrops. That was very big.
Jupiter, Hyperliquid, gigantic one.
Yeah, of course. So like, and to be honest, I think that probably will still continue. We have kind of like gotten away from the pure form of like airdrops where you didn't know any of their criteria.
You can almost expect, you can kind of predict what you're going to get. Pendle really changed the game for airdrops, made it a lot more predictable and a lot less random money falling from the sky.
Exactly. That's 100% right. I still think there's a lot of edge to be had there though, and I still think that like we will get back to a place where airdrops can be great again, to use a euphemism that is popular right now. But yeah, so I still think that's an interesting narrative. Speaking of airdrops, I do think it's worth kind of mentioning is we do have Babylon, which is going to be happening. I think the launch is happening this week.
About Babylon.
Yeah.
Please,
no.
Please. I've been bearish on this. Please give me the bull pill.
I understand the bearishness. Like, restaking feels a little bit dead and dry.
It's not even a reflection of Babylon. It's just everything feels so doom and gloom that even things that should otherwise be exciting, I'm like, so let me not, if Babylon's watching this, don't feel like it's you guys specifically. I'm just, that's just where I am now.
It's a grumpy time in the market. I think we all get it. But I think that, like paying attention and staying active, like there is edge in doing this. If you just go a little bit further down, little bit more, a little bit more. Yeah, here. I think this is a good place to stop. So just to be clear for everyone, Babylon's launching in a couple of days. They are restaking for Bitcoin. The big differentiation is they actually built on Bitcoin. And so all of these assets that are in these different colorful pie charts here are actually natively staked on the Bitcoin chain, which is very cool. Like I think building and doing more stuff on Bitcoin is actually very interesting. They then, have all these different LRTs. So you can see on the left-hand side there's a list: Lombard, Solve, Pump, Lorenzo, Bedrock. There's all these different issuers who take that, native Bitcoin. They help you to go and restake it on Babylon, and they give you a liquid derivative of it. There's been people who've been farming this for a very long time, doing loops on Aave, LPing, doing all sorts of stuff. And, arguably kind of the main airdrop is happening this week. Babylon is launching their chain. So they are actually going to be another, similar to kind of Bear chain. They're going to be like Cosmos-ish, where they're going to have like a Cosmos chain to start. They're going to have an EVM chain, which is like the main thing that's going to be moving on past that. So people will be able to claim kind of in two ways. One, if you natively staked, if you actually went onto the Bitcoin chain and staked it yourself, then you claim it directly from Babylon. Similar to EigenLayer, if you worked with an LST, so technically these are all actually liquid staked tokens, you then go to your Lombard, your Solve, your Pump, your Bedrock, and you claim it directly from them. So I think there's going to be a lot of activity happening on the Babylon chain early on. I think there's been, I really would not want to make an estimate of like what the FDV would be. Like
Right.
that was a very hard game with EigenLayer, for example, and now it's down to like less than $1.5 billion.
Can I interrupt you for
Yeah.
the funniest? I don't know. I don't want to be cynical because, it's not good form, but this just is hilarious. Again, not trying to be cynical, but Kelp, which has delayed their TGE as much as possible, is now, they say they're going to launch, maybe they won't launch, is now potentially launching in like the depths of the bear market as a result of all these delays. So update for you guys, Kelp, if you guys were farming it, says it's really happening. This is, I don't know, the 5th time they've announced they're actually going to do the airdrop. So don't get your hopes up, but they do have a graphic. So there's that.
Well, it's 14th. We have a date.
So
It's coming.
ridiculous.
It's coming, hopefully on the 14th. I will say, I was looking at their website recently because I've been like thinking more about like what it means for them to have their airdrop. And we always dunk on restaking for having a lot of supply in terms of people that want to get yield on their assets, but very little, if no demand for people to actually like rent the security.
Sure.
For some reason, Kelp has a ton of people. I think they have like over 30 or 40 different like AVS type things that are actually like, lined up for paying for restaked security. So like that's, I don't know, like you can see here, yeah, tons of these things. Or there's all sorts of different types. So there's 15 of them, but I think that they're coming out with a bunch more. Anyway, I don't know. I think Kelp has been struggle city. They've tried to time this airdrop to be super duper, at the peak of the market and kind of get the most hype. And unfortunately, it's ended up to be the opposite. So they're going live. But yeah, Babylon I think will be very cool. They're going to have their own chain. They're going to have a native DEX. The native DEX will be called Tower. So I think there'll be a lot of interesting yields that are going to be going on there. They're also going to have restaking. So just to be clear for folks, it's a little confusing. For all of these things on the list that Steven has up here, so the Lombards, the Pumps, all these different ones, Solves, these are actually technically LSTs according to Babylon. So these are liquid staking tokens. And so now, finally, that we have a Babylon chain, you will be able to take these liquid staking tokens, bring them over to SatLayer, which is like the EigenLayer for Babylon, and then these things will be restaked onto SatLayer, and then you will get LRTs of these LSTs. So it is a little bit convoluted. It's certainly something I'm paying a lot of close attention to. So hopefully next week we'll have like an interesting update from how the launch went, what the yields are like, and maybe there'll be easy places to go get, I don't know, 5 to 10% on your Bitcoin. I think that's the dream, right? Like, consistent yield on your Bitcoin with the token incentives that are liquid and not dealing with a ton of crazy points and speculative stuff that, may be looking long into the future. So I think that's the bull case for it. I'm optimistic. Clearly, Steven, I can just tell from his chewing on his blue blocking glasses is not fully bought in. But I think that of the things that are launching in the near term, I think this is probably the most exciting.
I've been bull posting or like excited about BTCFi since it kind of started. I think we were sort of on the cutting edge of BTCFi and have consistently said, one, it's an existential threat to Ethereum as an asset, not as a chain. I think ETH chain is still going to be the hegemon for a long time. They built so much infrastructure, and more infrastructure is building every day. They still have a huge war chest to spend on development costs if they don't squander their money. And like the future of finance probably is going to be built on ETH, probably. Maybe not like in 10 years, but at least in the short next 5 years. Nevertheless, BTCFi poses an existential threat to ETH as an asset because it's a way more interesting asset to get a yield on if you look at any chart. So I like BTCFi. I am very excited for BTCFi to exist. I expect that the majority of it will exist on EVM rails. And so, hey, yields on Bitcoin, count me in. That gets me excited. I hope it is as cool and as fun as you think it is, or think it will be. And I know I'm like not going to put words in your mouth. You're not like shilling it. You're excited for it. And I want to be excited too. So we'll see. We'll see what happens. I want good yields. And then Kernel, hey, you know what? I'll give him if you know, let's just hope. I'm trying to say something positive. I like the people that run it. I like the Kelp guys. It's just I just feel burned by them at this point. I like Stater, right? I've liked all the teams involved. The UI is actually quite nice on the website. It just feels like, yeah, just it's a little bit tender, right? The sentiment towards that. Okay, so Babylon happening this week. What do people need to do again to check like their airdrop? You mentioned like it's each individual.
So you can go claim it. If you were natively restaking your Bitcoin, you would go and get it directly from Babylon. There's a link. You should go to their official Twitter.
Like these guys.
If you're one of these guys, then you go to them and you get it directly from them. And so like this is going to be a bit of a pain for folks. Like Steven's going to feel pain as soon as I say this. You need a Kepler wallet to claim this because it is on a Cosmos chain. But you know, the word is that Cosmos chain will only be around for a relatively short amount of time, and then it will all move to being EVM, similar to the way Chain is EVM. So it'll start here, you'll do your claims here, and then the ecosystem that is being built out around Babylon will actually be on the EVM. So Steven can go and use his Rabby and do it and feel happy getting his BTC yields.
Somewhat embarrassingly, I have been meaning to like maybe dabble in the noble 14% APR. Now there are fees here, and actually I've talked to some larger capital allocators who said like, yeah, the headline APY looks nice, but really the fees make it kind of a little bit painful. But really, like for me, the only reason that I haven't even played with it at all is because it's Cosmos, because it's IBC, and I just didn't want to use a Kepler wallet. I didn't want to go to a new chain. I just like have so many negative connotations. I would like to dissect one day what happened to Cosmos. My own, like, very, very naive take is just that it was too captured from a cabal that was too greedy, and as a result, it just couldn't maintain enough retail interest. But of course, like that's a very doomer take that is not necessarily based in reality. It's just it's a feeling, and it's a gut reaction. I hope it's not true. They've built some cool stuff, and like oftentimes the best tech from IBC makes it into EVM. So, but yeah,
I would the comment I would make on that is it's almost like the Scottish clans. Like they were all their own. Instead of having, this is gonna be a really weird analogy, but I'm gonna try here for a second, guys. It would be like the wars between England and like the Scottish clans, where you know the English king came up with his one unified army, which would be like an ETH or like a Sol, who like are all centered around one idea, which is the king, the asset, the ETH, the Sol, like the one thing everyone kind of has and has a connection to, and like Cosmos, in my terrible analogy, is like the Scottish clans, where they all have their own tribes, they all have their own beliefs, they kind of like one another, they kind of don't like one another, they're fighting for this idea of Scotland, which is like, I think in Cosmos's thing, this like IBC interconnectedness, this interweb of like chains, where they all have like sort of an agreement on how things done, but not necessarily like, you know, the specifics of like, should it be this way or should it be that way? And like, is this chain better than that chain? And like a bit of competitiveness. And like, I think that's the reason that they failed, was they never could quite unify around stuff. And they always, instead of spending time fighting the British, they spent too much time fighting one another. So that'd be my sense, but I'd be happy to have a longer conversation about it. I do think it's fascinating to examine the...
Yeah, we could bring on some IBC people and just like ask them what went wrong. I'm sure we should bring on Jay and Eric and see what happens. Or Ethan, sorry. That would be firecrackers. Okay, so it does still exist. There are still good deals out there. We were talking earlier before this that like, yes, I am leveraging PTs. I think that's a lot of fun. There are a lot of risks to that. I think the reason why leveraging PTs is so available now is because had you been doing this exact same strategy as yields were increasing, you could have gotten liquidated because your PT value may have gone down, right? If your PTs are inherently short yield. So if the implied yield goes up, your PT value can go down, even though it should always mature to the full like one-to-one value. And we did see some cases where people got wrecked because of buying PTs at the wrong time and leveraging them at the wrong time. So do know, like, it's a real risk that does exist. So, you know, like, just because I'm doing it doesn't mean you should do it. We were talking before that Spectra does have higher yields than Pendle currently. But, and this is the big caveat, Spectra isn't a place for whales. Like, you can't put seven figures into anything on Spectra at all. Like, there's not a single market where you can put in seven figures and without taking at least a 50% hit on the yield. And that's like the most liquid markets on there. Whereas Pendle, you can yeet $10 million into a handful of these PTs and still get above a 10 to 12% fixed rate, fixed date on the PTs. So I think, like, I like the risk profile of Spectra, even though it's not as well known as Pendle. It's been around for as long as, if not longer than Pendle, actually technically longer as APY. I like the otters, I like the dev team, but it's just not for whales, and Pendle is. So I think one thing to consider for every DeFi user is which protocols are expressing my thesis at my size. So we've often said, like, one of the things we want everyone to know, because, you know, like, as educators in the space or whatever you want to call us, one of our goals is to enable people to express their thesis optimally with the tools available to them. So what that means is, let's say you want a fixed date, you're neutral on the market, so you're looking for a neutral yield, and you want to express that thesis on a fixed rate, fixed day because you don't want to participate. Okay, well, Pendle's the place to go, but really what you're looking for is rate swapping. Okay, well, rate swapping, what? And then you need to know your rate swapping protocols, and then out of those, choose which one is best for your size. So I don't know, this is just a thing that came in my head earlier today, and I do think it's poignant, right? There are better protocols for minnows, and then there are better protocols for whales that express the same thesis directionally.
I think that's spot on. You know, it's rate swapping is such an interesting category, and it is very interesting to see how different protocols cater to different clientele. I do think the only thing I would just say, you know, push back a little bit on what you said is that I don't think there's any spectrum markets that can, you know, you were saying 7-figure positions. I mean, I think it's a lot smaller than that. Like, I think if you wanted to throw $100,000 or a couple $100,000 into pretty much any of these pools, you would have insanely bad slippage on them. So Spectra's cool. I like it. I have played around a little bit on it. Yeah, I do not like it as much as
the 6% decrease in IY there.
Yeah, like it is not for the faint of heart.
When it would make negative 100. Okay.
Yeah,
I take it back. There's nothing on Spectra that can handle 7 figures, and even 6 figures is going to nuke the price or the IY.
Yes. Yeah. So that's the problem. It's a minnows game. If you're a minnow and or a shrimp or I don't know what, like crab or whatever, like the thing we're saying is, Spectra has some cool stuff. Go play around with it. If you're operating on size, go use Pendle. I think it is more trustworthy. It is deeper liquidity. I sleep well at night having funds on Pendle. Spectra, nothing against them, but they are still newer in the sense of having a product they're newer in having a product that is useful and so less battle tested. The other thing I would say is, like, Spectra, limit orders. Have to have limit orders. That is the solution to this problem, is, like, you need limit orders, because Pendle limit orders have done me very, very well. The other thing is, like, they need to find a way to attract more liquidity, right? Like, the name of the game, and the Pendle has been so good at this, I think you were saying that, is that, like, through VE tokenomics, Pendle has been able to attract at times very, very, deep, high liquidity, which is fantastic. Spectra needs to, and all the other yield trading platforms need a way to kind of, like, be able to compete on that front, because liquidity really is the name of the game.
So I know we're a little bit over time here, but I wanted to kind of finish on that point, which is, because liquidity is the name of the game, it feels like the future of DeFi is a curator's game. We've seen the most success from nascent money markets this cycle. I say nascent, I mean, like, Oiler and Morpho aren't really new money markets. They're like second generation versions of their originals this cycle. So like Morpho Blue, which is just Morpho now, and then Oiler V2, which is just Oiler now. Those both emerged this cycle, even though they had predecessors last cycle. And the reason why they've been so successful is because they went with this curator model, which effectively is a way to immediately get incentive alignment between asset issuer and deep liquidity coming from effectively a hedge fund. And it's brilliant. And we've just seen recently Gearbox enter this arena. So this made me excited because I've liked Gearbox since they launched. When they first launched, I was like, oh my gosh, this is like the crazy protocol. I can't even understand it. And it was like so mind blowing to me. And now it's like, okay, well, it's just it's a money market where you can do fancy things and like manage your credit account. But, I was looking at it and looking at like some of the Sky Rewards rate loops and like some of the ETH based loops. And when I clicked on them, I realized that these markets are being curated by chaos. And I thought, oh my gosh, they have curator systems now. That's great. Because what that effectively means is there's going to be probably, right, you would assume, deeper liquidity than if they were just trying to source this liquidity themselves through their own means and through their own incentives, which also puts a damper on the governance token. So that got me really excited. I hope that Gearbox gets a second wind. I am enthusiastic for the curator wars because it's effectively a bunch of hedge funds who are bringing off-chain liquidity on-chain on the lend side, which is really beneficial for us as DeFi users at the end of the day. So this is, I think, getting so close to correct value alignment where everyone is benefiting from the system. And that's the kind of stuff that I just get super excited for. And I hope that more people find a way to bring this idea, maybe it's not the curator system directly, but something like this system to their protocols. I'd like to see it, everywhere that it's applicable, because I think it's getting so close to exactly the kind of value alignment we need to want to see for the future of DeFi.
Great point. Great place to end it. Thank you, Stephen.
Yes. And of course, as we always say, thank you for watching and have a wonderful rest of your